Khurram, should we start?
Yes, definitely. Let's get started.
Okay, guys. So, first of all, thank you very much for taking out the time on the weekend. I appreciate that, especially when we are coming out of the COVID. Everything is open. There are many choices, but learning is one of the things which you preferred over going out, which is, thank you very much. Big thanks for that. My name is Ali Merchant. By designation, I am CMT. You know, most of the guys, you know, Khurram Khan. He doesn't need a lot of introduction. So the theme is, I'm going to start with the introduction. Then we will have a couple of minutes of presentation initially. I will define what technical analysis is. It will be interactive. I will ask a couple of questions. I would like your participation. I appreciate your participation. And then we move into the fun part. And at the end, I'm going to give you one technique which you can start from this evening. And in the end, we are going to analyze a couple of charts using that technique. Okay. So let's move on, guys. So my name is Ali Merchant. By designation, I am CMT. I've been in the industry, I've been in the trading for more than 30 plus years. I have trained about more than 2,000 people across North America, Gulf countries, and Asia. I would say North America and Asia. I was, for a very long time, I was part of Thomson Reuters. So I do understand. So I come from actually fintech background. So I understand the financial market. I understand the technology side. Before joining Thomson Reuters, I was part of Macallan and Day Capital Partners as assistant portfolio manager based out of Toronto. I used to manage 3 funds. So that includes income fund, that was a US fund, and the global fund. Right? And it was Islamic Sharia fund. So it was ethical fund. Before that, I have worked with ABN AMRO Bank in Treasury and Capital Markets. And I was in the trading, FX and rates and commodities trading on the Treasury and Capital Markets sales. Before that, I was part of Bridge Information System. Before that, I was part of Bridge Information Systems. Bridge Information Systems had bought Telerate. That was one of the oldest financial information provider. While I was with Bridge Information System, I used to work with Bridge News Chicago Bureau, and I used to produce technical analysis report outside of the US. So there were about 5-7 analysts. I was the only one who was selected to participate in the team sitting outside the US. Right? So that's a little bit brief about myself, right? And I am a member of CMT since 2000. I'm CMT since 2002. I'm associated with CMT since 1997. So initial 5 years was associate member, and later on as a full-fledged CMT member. I'm in a good standing with them. Got very good relationship with the CMT guys. There was a symposium in the end of April. For some personal reason, I could not attend. The symposium was in New York. They have another symposium coming up somewhere in September and November that will be going to be in Dubai. I am a member of CMT Canada, and I am a member of American Association of Professional Technical Analysts. The old thought leaders of technical analysts, most of them are part of EPTA. So I have a privilege, by the grace of God, I have the privilege to be part of them, right? Let's move on, guys. Okay, let's go. Now, I will show you what I used to. So I will show you my newsletters, which I used to produce. So let me just go here. Okay, so this is the newsletter. I was part of the Bridge News Technical Analyst team. It's from August 7th If you go here, Michael Kahn used to write for Barron's until recently, until 2-3 years ago. So he was he's my ex-colleague. And you will see Elliott Wave Technical Analysis. These newsletter, these was part of it was my part of my responsibility to produce these newsletters. And you can find me here. My first name is Ali. My middle name is Asghar. Right. So these are the newsletters. You see, I was based out of Riyadh, Saudi Arabia. And this is the newsletter I used to produce. Here you go. Sorry, 1 second. This is the wrong one. All right. Okay, let me go to the presentation. This is again one of the sample which I'm just showing it to you. See the Elliott Wave stories. I used to produce on a daily basis 2 currency.
Ali bhai, sorry to interrupt you. There's I got a private message from somebody saying that they're waiting for the
okay, yeah,
post
sorry, yeah. I'm just
permit them.
yeah, sure. Sorry. Okay, guys, sorry. So I used to, on the daily basis, I used to produce a couple of currency and German bonds. And on a weekly basis, I used to produce, what do you call it, technical analysis on Elliott Wave analysis. Yeah, so you can see that NASDAQ. So very familiar to the market. And this is the, I mean, you will appreciate that 1 second, there is another gentleman joining. Okay. You will be very happy, pleased to know that the letter I got from them, from Kevin Panley, my bureau chief, I'm sharing it here. So this is the highest recommendation I got ever in my life. Kevin Panley was the bureau chief. I was in Chicago for a couple of weeks in 2000, August 2000. So Bridge News newsletter was disseminated or being used by 200,000 subscribers. So a lot about myself. Let's get into the subject. Just wanted to give it to you what's basically my background is, and I mean, just a little bio about myself. Okay, so let's go and let me come back to the presentation. Sorry, 1 second. Okay, let me go to it. I like to put some quotes. Education is not the learning of facts, but the training of mind to think. Albert Einstein. Education is the passport to the future, for tomorrow belongs to those who prepare it today. Education is not learning of fact, but the training of mind to think. Again, this is the repeat of this, right? There's something, I mean, any analysis or any subject you learn in the life or life has 7 rules of life. If you are wrong, learn from your mistake, let it go. Don't stick with it, right? Then you will not be able to come out of the situation. Ignore. See, these days we are in a time with a lot of information. You have to pick and choose the information you want to read. I only read selective, guys, not more than that. It takes time to heal. A lot of people, those who came into this market in 2000, 2001, when people came into the market working from home, they thought that this is it. I have a jackpot. Market repeats every time this scenario comes. New people come in. They get rejected. They get dejected by the market, and then they said that the markets are maneuvered, and then they leave the market. The main important thing is first try to learn the game. Understand how the game is being played. And fourth is, do not compare your results with others. There's one phenomena in the corporate world, and I believe some of you are from the corporate world, is you are being paid. Your salary will depend on your skill set and how easily those skill sets are replaceable. So do not compare. Right? Stay calm. It's on you. Success is a choice. Let me repeat it. Success is a choice. You have to make a choice. And as Muhammad Ali said, I hated every minute of training, but I said, don't quit. Suffer now and live the rest of your life as a champion. This quote from Muhammad Ali Jinnah qualifies and goes right on the market. I do not believe in taking the right decision. I take a decision and make it right. All these analytical tools and everything, they do work. But the important thing is they do fail. So I don't believe in taking the right decision. I take a decision and make it right. That means take a position, put a stop loss. Right. So let's get into the subject. Now, open to all. What do you think what technical analysis is? Let me go back to the previous slide. Sorry. Okay. What do you think, guys? What do you think what technical analysis is? Anyone?
I think give it a time.
Sorry, come again.
I think number 3, give it a time.
Okay. No, but basically this I've moved back to the previous slide because my slide has the definition of technical analysis.
Okay.
Right. So basically, in your understanding, what do you think what technical analysis is? And how old is the subject? Anyone? Please feel free to make it interactive. Anyone would like to reading the charts? Okay, thanks, Saad. I got it.
Can you hear me?
Yeah, I can.
Okay, so the technical analysis is of any subject that we are going to be studying to act upon. Let's say if you're going to be doing in a trade, if you're going to be driving, they're all technical. So we have to do analysis of certain things, that what is needed for that trade to be successful, what is needed for that driving to be successful. Like, let's say we have good brakes, we have good paddles, we have good steering wheel, we have a right direction. Those are all technical analysis, whatever we are doing every day.
Basically, you're saying training of yourself to
of anything like towards
exactly.
success of whatever direction that you're going to be heading towards.
Sure. Okay. There is no right and there's no wrong definition in it. But I will share my experience or what I think, what I have learned over a period of 30 years, right? Anybody else would like to contribute? Anybody would like to send it in the chat? I have my eye on the chat, so please feel free. Let's give about half a minute, 30 seconds, and then otherwise I will start what I think and what I have learned over a period of time. Anybody would like to share anything? Okay, so let's move on. These are the best 5 definitions I have found about the technical analysis. The study of data generated by the action of markets. Right. Now, here in the sense of technical analysis, we are talking about technical analysis of financial markets. Right. A study of behavior and psychology of market participants and observers, graphical picture of market sentiment, analysis that studies demand and supply based on price studies and trading volume. The last one is the highest and the strongest, which I even will explain it to you. Technical analyst is a market psychologist. Why? Anybody would like to share some of his views about why do I think technical analysis is a market psychologist? Okay. Please.
So that they can direct it, whatever, looking at all the pictures, they can direct their trade, keeping in mind that what is happening and how the trades are going, keeping in mind, that's what the technical analysis is. A psychologist, he reads all of those readings and makes a decision on how to proceed with the cure, basically, if it's a psychologist.
Sure, sure. Again, I'll explain in my what I have learned in last 30 years. Any analysis you do, what is the outcome you want to get? Any sort of analysis you do for financial market, fundamentals, fusion analysis, flow analysis, option flow analysis, order flow analysis, level 2 book and all those, level 2 order flow and everything. There's only one objective. The end result is you buy or you sell, right? Anything bought or sold on Friday or Thursday, it's already reflected into the prices. Correct, guys? So there were a flow of huge buying or there was a flow of a huge selling. That's already reflected in the prices. What is a technical analyst doing? Technical analyst is looking at the prices, historical prices, to figure out, to actually make sense of what market is likely to do. It's forecasting. It's, I mean, there's a thin line between forecasting and predicting. When you do the prediction, you do not have the historical pattern or historical movement of certain instrument or the markets you're looking at. But when you're doing the forecasting means you have some historical data and you're forecasting on the base of historical data. So that is the key difference, a slight thin line between forecasting and predicting. Prediction can be right and wrong, but data cannot be wrong. Forecast can be wrong because data is already, we have gone through it, right? So I believe technical analyst is a market psychologist. It's a game of observation, how you observe the market. And I will give you one perspective. There's one thing about technical analysis. Technical analysis is more used, less understood, right? And I will tell you, I'll try to give you the idea of how it actually I'll definitely support my statement, right? Second thing is fundamental analysis. It is a very long-term, long-haul cycle, long haul journey. Now, if you guys, some of you guys have been into trading or have read about trading before year 2000, trading has changed into millennium, into 2000 and 2000 and ahead, right? There's a guy by the name of Peter Lynch. In 1980s, I think he was the guru of financial market in the stock market. His philosophy was buy and hold and sit on the position. If you believe in the sector, if you believe in the company, if you believe in the fundamentals of the company, financials and balance sheets and everything, and the product. Now, buy and hold was a good strategy pre-2000. Post-2000, it is definitely not a very good strategy because the markets are very volatile. Like markets, just to give you an example, those you are into trading, most of you know about Tesla. Tesla low. Okay, let me show you something. 1 second. Okay, let me just a second. Okay, let's see the Tesla chart. I'll explain you all these boxes, but I'm just at the moment concerned about one thing is Tesla made a low of $100, and I'm pretty sure that most of you are using TradingView, so you can see the pricing open, high, low, close over here, right? If you're not familiar, here you can see the prices. Tesla low for the year on January 6th is 100. 103, not 103 rather, it's about 100 point something. Sorry, this one. And 101.20. And Tesla high for the year is 217.5 to 217.18. 200 times, 100 times, more than 100 times. Right? So with this volatility, if I buy here and hold, I'm in trouble now. Right? The best strategy these days is buy and sell when you see the market has done, or if you think the market is overdone, and then you wait for an opportunity to buy it back. So it's buy and sell and buy it back, or sell and buy and buy it back, right? That's what it is. Like, okay. So let's go to, by the way, what do you think? How old is this subject, technical analysis? Any guess? Uh, 40 years old. Okay. ZK. Okay. Anybody? Is it 50 plus, 100 plus, 150 plus? Well, 5,000, no, Saad, you are probably.
The data has been used for a long period of time. I think it has been over 140 years, because like whenever we input the data to do the studies, most of the studies are, you can have the 100-year-old or you can have 120-year-old. So I'm pretty sure that it is more than
150 years, about 150 plus.
Yeah.
Between 140 and 150, Japanese rice merchants, they started to look at the future prices of their crop, right? So they started looking at the data, they started accumulating the data, and they were the one who came up with the Japanese candlestick. So Japanese candlestick is known, the Western world came to know about Japanese candlestick in 1980s, when Steve Nissen was the one who was working with Merrill Lynch in Japan, and he came up with he brought the books into English, but there were most of the terminology, if you go in the Japanese candlestick, Japanese. So the subject is 150 years old. So you will now appreciate what you are learning is a pretty old subject, right? Let's go to the next slide. Why do we use technical analysis, or why do we use analysis? Let's go back here. Timing is critical. So we follow time clock. We follow our times, watches, wristwatches. We go into a rhythm. If S&P is up 10% and I am up 10%, then I haven't added, I did not add any value. If I put a tracker fund, so if I do exactly what S&P constituents are, so one of the key constituent of S&P is 7 to 8% is Apple. So if I put 7 to 8% of Apple in my portfolio and go by the constituent what S&P weightages are, I will achieve the same result. Right? Outperforming and beating the market is where we use timings, right? Fundamentals makes a longer term picture. Technical part of it is good for entry and exit. It's good for short-term trading. It's good for long-term trading. It's good for longer-term trading. It depends what your perspective is, right? So timing is everything. Timing is a critical factor in the world of investment and trading. Beating the market. Okay? Now, most of you, a thought came to my mind. Most of you, those who have been trading, when you started trading and you had a loss, you were not very upset about the first loss. But when you started trading and you made a profit and you lost the profit, that hurt you more. Am I right, guys?
Yes, that's true.
Right? So basically, losing the money which you made hurts you more than actually if you had a first loss. And I tell you one thing, those who are successful in this market have blown up their accounts, had the worst nightmares, had the worst trading in their initial learning period. And that includes myself. I'm not saying that I have blown up many times. See, by the way, just to give you an idea, by profession, I am actually, these days we call it information technology. At that time, it was data communication. So by profession, I am a Bachelor of Technology in Electrical. And somehow I found that most of the engineering guys have been very successful, especially electrical engineering, where a lot of maths is concerned. They're very successful in financial market. Right? So I came into this market by an accident. It was not planned. Right? What happened was, when I joined my career, I started my career with Reuters, which is now, everybody knows Reuters is the news agency, but Reuters has a lot of has a large business information, business information, financial information business. 80% of the revenue used to come from there. News agency was only contributing 20%. So I was part of the team, and Reuters used to provide this information, and I liked it. For some reason, in my genes, trading is in my genes. So I took a first trade with my boss. So my boss was a partner in the trade. And guess what? I lost 6 months of my forward salary within the first month of joining the company, first or second month of joining the company. Now, that was a good luck and a bad luck as well. Good luck in the sense that my boss could not fire me because I didn't have money to pay. So he had to rely on the salary which I'm going to get. The bad luck was when my reputation was at risk. So I had a bad reputation initially. I have blown up my account. I have traded in stocks in Pakistan stocks. I've traded in international equities. I have traded in currencies, oil, commodities, and all those things, right? So that just came to my mind, and I said, let me share that. So those who blow their account doesn't mean that this is not their market. The one thing which is very key is you should not have the ego. If your personality has ego, that then this market is not for you, because market is the master. And it will remind you every day that the market is always right. What I say is, plan your trade and trade your plan. Do not trade what you feel, trade what you see. Okay. Now, just to give you an example, this, as I said, the technical analyst is a psychologist. And the other thing is, there is always a disconnect between the fundamental economic part of it and the technical part of the financial market. Now, let's look at this example. The chart is from August 19 to December 2020. And most of us remember this part. COVID, March decline. Right, guys? Now, before that, in December and February, if you see, the markets were going, S&P was going higher. And this is our beloved, very lovely indicator, relative strength index, RSI, which is an oscillator. It oscillates between 0 to 100. And if you see, market was consecutively going higher, RSI was consecutively going down. Bearish divergence, triple bearish divergence, collapsed. Bullish divergence. The market kept on going down and the RSI started moving higher. Bullish divergence. Now, how fundamental disconnect? See the story reported by, I will show you, it's from Wall Street. Okay. It's from AP, Associated Press. And let's go to the story first. Dow dropped more than 900 points, ending worst week since 2008, Associated Press. This is the story. If you read through it, it's a very gloomy picture. This is 21st of March. Right, guys? Let's go back to the previous slide. What was the technical saying? That there is a warning sign, don't sell. Not the time to sell, and this one, not the time to buy. Start scaling out. Start getting in, right? Let's go. Now, what happened from 21st March to 25th of March? Stock surged 7% as hopes built for a US coronavirus stimulus. Right, guys? So how there was a disconnect between technicals. Let me go to the previous one. Oh, sorry. Right. There was a disconnect. When the market is making a top, the fundamentals will be very green. It looks like there is no end. We are going to heaven. And when the market is making a bottom, it seems like the world is going to collapse and tomorrow is going to be the doomsday. Right. And that I have seen in 30 years in my life. Right. Let's go to. So any question, guys? Anything you would like to ask me or any question up till here? Okay, so I'll continue. Meta, at that time it was Facebook.
I have a
ahead.
question.
Sure,
I have a
Fadi.
question.
Sure, Fadi.
Yes, my question is, it's a sentiment, right? Fundamental doesn't change, but the sentiment change of the market. So whenever we traded from March that we are talking about COVID, that was an event trading. That was because of the sentiment of the market. It changed from buying to selling. It occurred. And then sentiment changed again whenever the stimulus happened again. Fundamental still didn't change for any of the corporates or any of the companies. They were still making the same kind of money. So they were still being eligible to be bought. If I'm
Fareed, I think please go back and read what the corporates are doing at this portion, at this around between February to April 20. Corporates were crying. Corporate bonds were tanking. Corporate America, corporate world was crying. That's why Fed came. Fed did not started. The first thing Fed did was decrease the interest rate and Fed, what we call it today, printing money. Fed actually came, bought the bonds. Credit spreads were like going to hell. Corporate bonds were selling like anything. Nobody was ready to buy. What Fed did was Fed actually started buying the bonds, corporate bonds, started buying the stocks. BlackRock was given this responsibility. BlackRock was hired to buy the stocks. If you guys remember, please, there were a couple of guys from Fed, they had conflict of interest and they were asked to move out of the Fed because they were doing the front running against what Fed was doing. The Fed was buying, was planning to buy IBM, some XYZ. They were doing the front running. Boss, please go and read what happened. The entire world was bleeding. The real estate market was going to the hell. The entire sentiments were changed because you were looking from the perspective of, lockdown. In the lockdown, what are you expecting? Anybody in the retail sector got killed. Anybody who was running the restaurant, there were guys. I know there was a couple. They had a restaurant in Toronto. They committed suicide because their borrowing was too high. Then, so guys, it was a total gloomy picture.
Sorry to interrupt. That was the same thing that I explained. It was a sentiment, but the fundamental didn't change of those corporations, even though that they were crying. The Feds were buying those at that moment,
because
and
Fed came to support that. Fed wouldn't have.
Exactly.
Let's take the scenario. Why is Fed not supporting now? Now is the worst situation than COVID.
Exactly, because they are not supporting at this subject, because the price on those bonds are way higher than they anticipated whenever they were in there. So now they are ready to sell and take their profits.
No. Fed had ballooned their balance sheet in the entire 2020 and 2021. Fed had indicated that they're going to sell their balance sheet, offload their balance sheet March last year. They have already offloaded. But the market has been going higher when they were offloading. Right? So coming back to the subject. My subject is not fundamentals. My subject is technicals. Here the markets were going higher. Technical model oscillator was saying market is going down. Right? The technical indicator model was saying that there is something is disconnecting. Markets very positive. RSI is not confirming. Markets very bearish negative. RSI is confirming. It's not confirming. There is a disconnect. The point is here that the fundamentals and technical picture disconnect at the tops and the bottom of the market. See here. I had discussion with a lot of guys and I said, guys, time to buy, right? And I'll show you a lot of things. And a lot of guys, some of the guys are from this forum, they know that I'd been bullish on Tesla from first week of January, right? And I'll show you what my reasons were, right? So let's get back to the subject. Now, there are a couple of things, like, as I said, technical is very much used, less understood. There are three types of technical, the technical analysis is classified into three major classification. One is classic charting, which is price action and that's what I love it and that's what I do. Second is you look at the indicators, right? Indicator is the secondary part of it from my perspective. Third is you do the cycle and wave analysis. That is very subjective, right? I mean, there are a lot of people, they do Elliott wave analysis and I think that's very subjective, right? The one which has been working since almost last 150 years has been classic charting, right? Now you look at this Facebook, it was Facebook at that time when this chart was taken. Trend line. Now the line is, what is the line? Okay, let me go back at, let's go to the fun part now. Okay. Any stock of your choice, guys. What stock would you like me to go through? Anyone? Fareed.
First Solar.
Sorry?
FSL.
FSLR.
Yeah. I lost a lot of money.
Okay, let's see. FSLR. Okay. Now, this is what I do. Now, let's go and let's change it to daily, right? And I will look at the line chart. Now, before I get into this, let me finish one or two things from the presentation, and then I'll explain you what I'm like. So basically the trend lines. So then we'll go back to the chart. So it will be very meaningful, right? Look at the trend line. Trend line broken, down. Trend line broken, down. Looks like a triangle pattern. So these are the classic patterns. There is a book by the name Edward and Maggie. That book was, first edition was something in 1910. Wonderful book on the classic chart. Apple. You see, every time it goes higher, consolidates, flag, bullish, sorry, my bad. Okay. All right. Flag formation, moves higher, consolidates, moves higher, consolidates, moves higher. What do we have? Rising prices, bearish divergence on momentum, declining prices. What happened? Prices were rising, divergence was bearish, market collapsed. Right? So these are the what I would like, the reason I'm showing you this is basically technicals. Market is more technically driven, momentum based. Now, most of you have heard of a factor based funds, right? Now, you will all be surprised that factor based fund has 5 factors. That includes economic factors, economic indicators. That includes, economic indicators includes employment numbers and everything. One of the factors is interest rate, because interest rate does not change frequently. Economic number comes once a month. 25% of the weightage on the factor-based fund is based on momentum. Right? Check it out. I think check out BlackRock's website. You can find it. 25% is based on momentum. So the moment even these fundamental fund managers, they look at a lot of momentum indicators. Let's go here. Now, Technical analysis is a key tool to identify the market trends. Technical patterns help in clearly finding continuation, reversal trends. Indicators highlight the extreme levels in prices and identify crowd behavior. Combining price action, pattern, and indicators pave the way for a robust trading plan and strategy. This is what technical analysis can bring on the table. Right? Let's go. What trading methodology I'm using? Strength, direction, momentum to look at the strength of the trend. So the main is trend. What is the direction? Momentum, strength of the trend. Trend is accumulation zone or distribution zone. And we will work on this accumulation distribution zone. And I'll give you a technique which you can start working on it from today. Cycle, follow highs and lows. Multi-time frame strategy. This is what I train people. This is what I use on my daily basis. Right? Let's go. I want to keep a check on the time as well. So those who are new to the charts, or most of the guys, I'm pretty sure I've seen you guys going in the Telegram that most of you do understand. So line chart. For me, the key important thing is line chart. I do look at candles. I do look at bar charts. But why line chart is important? Line chart is important is basically market moves in trend. Market moves in trend, and market tends to close in the direction of the trend. So that's why line is very important for me. See, this is the trend. 80% of the time, market will close. Market will close in the direction of the trend. So it's the second law of motion. If something is moving from one direction to another, east to west, will keep on moving east to west until something changes and the car driver decides to move from west to east. So market moves in a trend, second law of motion. So the line chart is line chart is continuous closing on a daily basis at 4:30 in the 4 p.m. US closing time on it if it's a daily chart. If it's an hourly chart, it will be in close of every hour, right? Let's go. Okay. This is the accumulation distribution we're going to talk about. Let's go back to the chart. Sorry, no, 1 second. No. 1 second. What did I do? 1 second. Let me go here. I hope my machine. Okay, that's right. So FSLR, right? All right. So Fareed, what is your? I mean, you said you lost a lot of money in this one. So what was the time period?
How would you call it a bottom? How would you call it a top? How would you do? See, the direction is based on the sentiment of that our earnings. Two things which are very pretty dominant in any market to change the direction of any company is either the earnings or either the forward looking or looking forward to.
Guidance.
Like a lot of companies, guidance. Whenever they just suppose that if they are going to be doing good, they jump 10%, right? And the next day they have a gap up.
Well, Fareed, if it's the game of
Home
earnings,
Depot, they had a good.
Home Depot had
Exactly.
not very
So
good
that
earnings,
is
and their
continuing.
forward guidance was also not good. It's in my
Second other
opinion.
thing is government backing.
No, listen, Fareed. The key thing is, it's all about flow of money. Where the money flows, that's the way market goes. Now, what has changed? Why from before 2000, you buy and hold and you make money, and now you buy and hold is the worst strategy because there's been a lot of volatility traders. Walls are being traded, higher volatility in the market. Markets are not driven by the cash market. Cash market is the main stock market or the underlying. Underlying at the moment in FSLR is the underlying stock price.
See, my call is, let's say we have to compare it with S&P 8% annual growth rate. FSLR is totally defying that growth rate chart. You will compare it along with that S&P and see where S&P stands and where FSLR stands. If it is defined by the market, how is it way above the market price?
First of all, Farid, S&P is not the right barometer, because S&P has 8% of Apple, and you move Apple at the close and S&P goes higher. So that means the indexing is not correct. First thing. Second thing is, again, this is not I am talking. Now S&P is also talking. I am dealing with a company who's coming up with a new electronic indexing methodology. I'm working with them, right? So I know how much S&P CEO was crying on the LinkedIn when this guy came into it. The thing is that when it comes to the weightages, to 11% to 12% weightage in NASDAQ is Apple. You move Apple and the NASDAQ goes positive. As per Reuters, and I'll share that stories with you guys later today, there are only 5 companies that has moved in past 3 weeks. That is Apple, Google, Amazon, Meta, and that has moved the entire market. So I think I like to do one thing is because I have been traded, I started trading currencies in my professional international career. I look at everything individually. I'll look at FSR, I'll look at FSR. I'll not look at any peer in FSR with FSR, right? Now let's come back to the point, because we are not here, or the subject of today is technical analysis. Right? So I'll stick with the subject. Now, what is your question on FSLR? You said you lost a lot of money on it. Yes, Farid?
Yes, my question was, how do you call a bottom? How do you call that? Because most of the technicals right on that, it's showing that it has been overbought in RSI. It has been way over MACD, like it is way above that range. It has to be corrected. But every time that you get any options of that with the IV, it kills those IVs, like monthlies, weeklies. I mean, we are doing technicals right now, so I will rather learn instead of just one stock. I'll rather everybody have that, and we can have the conversation later. But you can explain right on that if you.
First of all, I do not rely on indicators a lot, and Khurram knows me very well. I do not rely on. Indicator is who is giving the indicator when you're driving the car. Is that the car or the driver?
It is the driver, yeah,
Exactly,
of course.
right. So who is driving the market? It's the
But
price.
RSI is the indicator of for the technical analysis, we use those indicators.
Well, Farid, I am here with my 30 years of experience. I'm trying to share my experience.
Correct,
So
correct.
give me an opportunity.
Sure.
The thing is,
not waste that.
I have used indicators. I have lost a lot of money using indicators. The successful story, my key success had been price action. I do not use indicator at all. I give you the example just to give you the idea. This is the chart I shared with Khurram and my student group. Do you see this channel? You see this move from bottom of the channel. This is the mid of the channel. At mid of the channel, it consolidates, it breaks, goes to the top of the channel. This is what I showed these guys when it was consolidating here around 161, 160, around 170. And I said it will pop up. And that's what happened on Thursday and Friday. This is classic charting. This is what I use. I haven't put any indicator on it. For me, indicator is just a filter and additional filter. If I use stochastics, if I use RSI, if I use momentum, they belongs to the same family. They are oscillators. They oscillate. They are overbought and oversold. Why should I use 3 of them? I don't use them. I only use 1 of them. So that's why I'm saying that technical analysis it's basically a completely different subject. It's the way the market is doing the interpretation and usage is different than what actually happens. In RSI, everybody go to the books. Textbook says about 70 is overbought, below 30 is oversold. And go, I'll show you, you will see yourself. Let me add. Okay.
And Farid bhai, one quick thing I want to add over here is that anytime, and not you, I'm not talking to you only, but to anybody. And you have known me for past couple of years from our Telegram group and WhatsApp group. So I always also say the same thing, that don't try to mix fundamentals and technicals together. Usually, the end result is not great for the trader. So we all saw the last earning report for AMD, how it tanked, and now it's at I mean, now it is at a higher price than it was before. Same thing with the Home Depot that Ali Bhai was giving the example for FSLR. So when you were talking about the fundamental part, the earning reports and the PE ratio and all those things, that's all fundamentals. So if you're going to be trading, I mean, I know you, and you know me, that we are short-term traders. So instead of looking at those macro fundamental things, it is and like you see me trade. So the way I trade is that look at what's coming up. I know you trade options, so if it's 1 week, 2 weeks, 3 weeks out of the calls or puts, look at what the chart is showing you and what the chart is telling you, and we'll trade that way. I mean, in the group, you also the CPI report, that there were a lot of bearish sentiment that is going to drop now, and we're going to break 400 SPY and all that stuff. And you guys all know that how I traded the CPI report in futures. So I was anybody who know me in this group, and my trading style, that I rarely rely or actually place a trade based on fundamentals until the charts or the price action has confirmed the price action. I don't usually get in the trades. So that's what Ali Bhai is also trying to tell you, that
Thanks.
fundamentals is a separate thing, and the technicals are completely different thing.
You have to actually keep the subject into the context, what a value it provides, right? Now, AK said that sector analysis, just sector is fine. Now, last week, let's take sector, talk about the sector. Last 2 weeks, what is driving the market? Artificial intelligence. But not all artificial intelligence companies have gone higher. Only the large caps have gone higher. So is sector giving me a value added? Now, what happens is when you look at the sector and you say, oh, it's time for AI, you will go and buy a company. I would say you'll go and buy a company which is in the value, it's $10 or below $10 because it's an AI company. But theme is AI. That company hasn't moved. Microsoft has gone higher. I mean, most of you do understand, probably most of you understand Urdu. There is one phrase in Urdu, Sasta roye bar bar, महंगा roye ek bar. So what happened in 2020 and 2021, when the market went higher, if my assets were about $2 million, I bought the large caps. But anybody who went to the small cap and startup, they have lost 50, 60%, 70%, 100% on their stock. Exela, Wish, Lucid. How many examples should I? Lucid is the same competitor of Tesla. It's sitting at $7.
Rivian.
Rivian, backed by Amazon. So guys, that's why I am trained to look everything individually. Ali Merchant, it has some pros and some cons. Khurram has some pros and some cons, though both are doing the same thing. Right? So that's why the best thing is to look at individually. Individual will tell you. Now let me come back to the subject, the one which I want to give it to you. So your question was, how would you know that the market is making a top or a bottom? My belief is when the market is making a top or a bottom, it will give you a clue. Okay, let's go to FSLR, right? And that will give you through the price action. Right? Now, I believe in line chart. I use line chart a lot, right? Look at something like, okay, look at this top, right? Let's go. We moved higher. We chopped a bit. Now, if you see, this was the first, This was the base. It chopped a bit. When it broke through it, what happened? Never looked back. Right? Now, any point, see here, market made a double bottom. Twice tried to break this portion. Okay, let me remove the magnet so at least I can. Let's go. This bottom is higher than this bottom one, right? Now, if I go and look at the candlestick, probably it might be a different story. Here, what happened is, if you look at the candlestick, it has actually it did not break the low, but it looks like it's a very close call that it broke the low, it's going down. But if you see on the line chart, it's a clear double bottom. Here we have a small, if you see a small diamond pattern. Now, if you look at the candle, you will not be able to see the diamond pattern. This is the diamond pattern. Okay. This is what I look at day in, day out. That's how I come to know that when the market is going to move. Diamond pattern is triangle from two ends. Triangle on one end and triangle on the other end as well. Very powerful pattern. And I'm going to show you one pattern on S&P now. Diamond pattern. What is happening here? I'm not looking at indicators. I haven't touched the indicators, but I can suggest you that the FSR has made a top. So this market moves in a rhythm, in cycles. What is I'm expecting here? This cycle, this low is higher than this low. This low is higher than this low. This low is higher than this low. The time it breaks the closest low, this one, it broke through this, dropped. It's cycle. It's a game of observation. Now, what I do generally is, which I call it demand and supply zone, or accumulation or distribution. Let me remove all these. I want to look at this chart. Okay. Just
Don't you
go
think
for
currently it is in the diamond position too? Like if you look at the line chart, right now it has three triangles right at the one end, and then it has made the highest of the day, and then it has gone low, so that it is ready to decline.
well, there is no diamond formation, at least what I can see. What I can see, there's no diamond formation. There isn't any. Diamond has to be.
On the line chart, whenever you have
No,
the
well,
blue-
one second. Let's see. This is the diamond formation. It's a triangle from one end.
Mhm.
Both end is a triangle. So this is a triangle, and this is a triangle.
Correct.
This is a diamond formation.
So on a line formation, we don't see a diamond right on there.
Where, how would you say, in order for diamond, you are saying that this is the diamond?
Yeah, three formations right there. Yeah.
No, it cannot
No.
be. It's a very lopsided.
Okay. Got it. Got it.
See, it doesn't make. You have to use a little logic right here. Right? So let's see what I do, and you can practice this whenever you like. I mean, you can practice it from today. Go for 6 months. Right? Go for 6 months or a year. I will look at the demand and supply or accumulation and distribution zone. I'll take a horizontal line, take the highest high, take the lowest low. Right?
Yeah,
Take the
Ali bhai, just a
50%.
quick question. Why not buy it when it breaks out from consolidation?
Sorry. come
Beginning of March or late February, beginning of March, why not buy it then?
Oh, one second. Let me just finish and please hold your question and I'll take it and I'll look
Sure,
into it.
absolutely.
Now, just divide it into 50%. Now, you do not need protector or scale or anything. Just divide it where it's. See, what happens is, this is the swing point. It went above this. This was actually a distribution zone. When it held this one, it became accumulation zone. Whenever the market goes from distribution to accumulation zone, when it flips, swing points, I call it swing point. It makes a high. Most of the time, it comes to retest that high. Most of the time, it will come to retest that confluence of accumulation or distribution. This was distribution here, then accumulation, and moved higher, right? Now, what I will do is I will look at the recent highs. Okay. This was, right? So put as many lines. Okay. Now you see this one was it dipped from here, moved higher, consolidated, dipped back, then moved low, moved higher, right? Now you change it to candle, and you will understand how the reversals have happened. Right? Now it makes sense to you guys? This point now, I'm not looking at the absolute number. I'm looking at the direction. Absolute number wise, maybe there's a $2 or $3. But when it crosses this point, you see how huge the green candle is? When it rejects that point, the rejection could not break this one, broke with the price opening gap. Came down, harami pattern. Came up, we have a bearish engulfing. See the difference?
And
This
guys, the
is-
name Harami
Sorry.
pattern is actually a pattern name. Is the name of the pattern.
Yeah, it's a name of the
sounds
pattern.
little-
Actually,
It sounds a little contradictory,
Yeah.
but it's the name of the pattern. It's called
Yeah,
Harami.
I know most.
Harami. It's harami.
Yeah.
Yeah,
Yeah.
Harami.
Basically, I mean, again, it's inside candle, inside bar in the bar chart, right? It's known as inside bar. See this one? Now, a lot of guys, there's one guy who calls it hot dog pattern. So this is the meat in between two buns, hot dog pattern. So that lot of things, right? When it came to this level, this was the accumulation level. It turned into distribution by the opening gap, price opening gap down, gap up, right? Now, always remember when there is a huge move, market can correct, but not more than 50 to 62%. This correction has lost, upside move has lost steam, right? So that's the point I'm trying to explain. Yes, Sad, I can take your question now.
The question was answered. Thank you.
Okay, all right. All right, now let's go and I'll show you something which is part of the presentation. Now, these are what I look at, S&P swing line, accumulation and distribution. And I'll show you in the chart. And I'll show you one of the pattern here. Yeah. And then we will go through how so any point, let's go here. What is a line? A line is a distance between point A to point B. But what is a trend line? Trend line is, in order to have a strong trend line, the more number of intersection point or testing point makes it a very strong trend line. Let's draw a trend line. Let me put a magnet from here. See this trend line? It's a very strong trend line. Every time. Now, we came to know about this trend line when it tested this one. Second test, almost third test, gap down now. It was because of the earnings. Yeah, it looks like earnings. And there was some news over here. So I basically, I don't follow. So I don't know what was actually, I think this was definitely the earning drop, right? And this is probably some news driven, which I have no idea what was it, right? But important thing is how to draw the correct trend line. A lot of people, they join trend lines, but they need more skill set to improve how to draw the trend lines. Not to draw, where to draw the trend lines. Let me put it this way. Okay. Now let's come back to these are my swing points. There was a distribution here. Again, you see the distribution here, distribution zone. We have distribution and something which I'll tell you for the next week, we are at the distribution point. And the other thing which I would like to show you is, I'm not sure how many of you are into price action, but you will see there's a megaphone pattern here, expanding triangle. The characteristic of expanding triangle is the market will come down, most likely. And there's one saying, what they call is, well, they say is, in jungle, monkey lives in tree, but monkey do fall from tree. So that means the important thing is I don't believe in making a right decision. I make a decision and then make it right. I can be wrong, but I have to put a protective stop loss. This is the region, these two lines, pink and red. The market can hover around this, but should not close above this, right? Expanding triangle means a dip. Megaphone pattern, dip. This is S&P as of today. NASDAQ. We are coming to the point. You see how market respected this trend line the entire 2022? And I think it broke in October, no, in 2023. It broke in 2023. And how we are coming to the distribution point. This was the accumulation point. This was the, it turned into distribution point. And we are coming at that juncture. Right? So this gives you the idea of what NASDAQ is doing. Let's look at Dow. Okay. So all three indices are giving me something very different than what market is anticipating. Dow is in the distribution zone. This is the distribution zone. This is the distribution. This is the distribution. This is the distribution. This is the distribution. For me, one or two close outside the distribution zone is irrelevant. It could be noise. Key thing is I want to see consecutive, sustained, decisive breakout. We haven't seen that. We haven't seen that. Who is saying that? AK is saying that it's an inverse head and shoulder. I have a very different way of looking at inverse head and shoulder. I look at inverse head and shoulder differently. Most of the time, and Khurram knows me, that most of the time I'm correct how I look at the inverse head and shoulder. There's a relationship which you have to understand. Right. So I'll not take it as inverse head and shoulder.
And Ali bhai, I've tested your theory live also. So it's been, I mean, 80% of time is correct.
Exactly.
So yeah.
Yeah. So basically, as I said, as I said, technical analysis is more used, less understood. This is putting indicators, and you need to know which indicator you need to use, right? Now, when the Fed pivot, I had this presentation, and I'll show it to you guys. There was 1 second. And there was like 8 or 9 months ago with the guys in EPTA, US 10Y. Okay. And this is the forum where you're talking about hedge fund managers are sitting. Larry Macmillan Oscillator, the guy who made Macmillan Oscillator is sitting there. John Bollinger is sitting on that forum. This was, corporate asked me what was my outlook on the interest rate. And you see, this is actual technical analysis. What I have done is this is US interest rate, Fed fund rate, and 10 years US Treasury yields. From 1959, I have compared whenever the 10 years US Treasury has bent down and the interest rates are still going higher, the market has pivoted. Fed has pivoted. See here. See here. Blue line is the 10 years here. See here. Same scenarios in the making. This is 10 years US Treasury. This is Fed fund rate. In previous Fed pivot was between 5.25% between 2006 and 2007. So this is actual technical analysis. When you compare between I mean, when you start comparing, when you compare instruments, when you compare markets, right? So that is all from my side. We have already crossed 17 minutes, so this was the part of it which we have gone through. I personally think, in my best opinion, S&P is coming down. What will be the reason? I don't know. It's debt ceiling talks drags on. Something happens, I do not know. Even if the debt ceiling is done, even though market will come, as they say, buy rumor, sell confirmation. Buy rumor, sell facts. So that's probably in the making. Right. So NASDAQ, that's all from my side. I am open to any questions you have if you want to analyze anything. Looks like inverse head and shoulder and VDAR. Let me check.
Hi, Ali Bhai. I have a question in regards to the course.
Right.
So I could see this is just like a presentation of like, what the course would be about, but what can we expect? Like how long the duration is going to be for the course? Like, is it going to be broken down into different topics? Are we learning like price action or candlesticks? What can you just give us like a little brief summary of what we would expect from the course?
Okay, so the course is divided. It's a month-long course. I do it on the weekends. So Sundays, I think basically Sundays in the evening. You're talking about learning from 20 to 25 hours in a month. That covers for no wise man, anybody who does not even know about what the markets and momentum are. So we'll talk about Dow theory. We'll talk about how the indices should behave when the market is in a rhythm, when there's a disconnect, how market does. We'll look into accumulation and distribution zones. We'll talk about a lot of price patterns. We will talk about one of my filter is indicator. I do touch base on indicator. I show what indicators I'm using. We'll talk about candlestick patterns, and I share two of my strategies, part of the course. The two strategies that I'm using. Right. So this is all included, and I generally I don't mind doing it. I have done with the guys. I do a live trading analysis in the futures market. I think the futures are open. I can show you a little bit right now. I'm not sure what the opening is in NQ, NASDAQ, and S&P futures. I have a position, so I definitely need to see the market where the market is, and we can just look into the market as we speak. So let me go here. You know what? Let me just change this to new layout. Let me close this. Right. So it's a very comprehensive 20 to 25 hours of course, and the best part of is it's not once you are done with the course you're gone. I share it's a continuous learning. I share the setups I'm looking at, like this Tesla was shared to the group with exactly what I was looking at. So Khurram got it. Khurram is
Yeah, it was
into
spot on. It was perfectly spot on. And that so after the course is done, everybody who's taken the course, they're invited to a separate group of all the students, and Ali Bhai will share any kind of developing setup that's happening, and he will give the right entry points and things of that sort, so that comes in as he sees any of those traits developing. So yeah, that's one more thing that's part of that course.
So at the moment, futures are little. Jafar, sorry, I can't hear you. Oh, the Quran answered your question. Okay, it's fine. So futures are a little bit up. Yeah, the 13,831. If you want to do a little bit of analysis of futures, we can look into it. Let's see. But I have seen on the daily that it is the resistance point. Okay. So let's go here. I will take the horizontal line and let me put a horizontal line on top of here. And let's put another line here. This is the region, distribution point. Distribution point. This was initially accumulation here, became a distribution here. This is the distribution line. We're actually testing or hovering around the distribution line. Right, let's go to the candles. Let's go to 4 hourlies. Okay, let's go to, even the other thing is I don't look at this volume. It's misrepresentation of volume. Right. Now, if you see on the 4 hourly chart, we had a nice dip, ended up in a doji. Now, at the moment, this 4 hour will close. It started at 6 p.m. So, we're talking about 7, 8, 9, and 10. 10 p.m. we'll see, but I personally think that it's going to remain close below this doji, which is 13,840. It closes below this. We are coming down to at least 13,660, 70 level. That's what I think. Guys, any question? I do not want.
Ali bhai just
Sure.
give you guys another setup for anybody who trades futures.
Sorry, come again.
I was talking to everybody. Said Ali bhai just gave us another setup, developing setup that's we can look at it at 10 p.m. Or at 9 p.m. Our Central Standard Time, and we can see if anybody. This is for anybody who trades futures.
Yeah, and you see, the thing is, this was actually the distribution. Supply zone, change into demand zone, broke through it, demand, it most likely it has to come and retest this level. Okay, let's go here. Let's draw a trend line. Sorry. I like to snap to the lowest or highest. Okay, so this is a line. It's not a very strong trend line, right? In order for it to be a strong trend line, it has to have a number of points. It will come to at least test this trend line. It rebounds, we'll see. That will come to know once it comes down here. But in any case, it will come to test this trend line. Once it tests this one, it's going to test this one and this region. That's what I think. Right, guys? Anything I can help you with? Any question you have? Yeah, there was one thing. Jafar, there's somebody who said about ER for.
Ali bhai, I just have one more question, just one last one. You talked about like the 5 or 6 big tech stocks that led the rally.
Right.
Like, what does that mean for the overall market? Is it manipulation, or is the other stocks like lagging? Is it going to be a sector rotation? Like from a bull market stand, like, we're above all the moving averages. Like, what's your perspective of that?
Well, you see, every market, whenever it moves, there are some leaders, there are some laggers. Like in corporate America, the worst leader last year was head of Meta. What's his name? Mark Zuckerberg. Well, yeah, he was the worst performing leader when he went into metaverse in 2021, 2022. He went ahead of time. This year, he's the best performing leader. His net worth is up by $44 billion. Right? So whenever the market moves, there will be some leaders and some laggers, right? Now, what we were talking about is when you go and look at the index, now index which has moved higher with only 5 stocks has gone higher, the remaining 95% are down or flat, right? that means there's something wrong with the index, right? Because S&P is a 500 stock constituents, but 5 stocks can move S&P, like NASDAQ is 100 stock. So if the NASDAQ actually, if you see NASDAQ has 100 stocks, but only the first 10% has the highest weightage. So if out of that 10, 5 moves higher, NASDAQ goes higher. That is a different discussion, right? But again, the leaders and laggards, it will always be the leaders will be the one which are large caps, which have a lot of story to tell, which have a lot of good guidance to show. And whenever the market is looking at see, last year was the market of inflation and interest rate. If anybody is following inflation and interest rate this year, is sitting on the wrong side. This year is not inflation interest rate. This year is the game of recession, soft landing or hard landing. Now, what will happen before recession? Fed is saying they have no plans to cut the rate until 2024. But do you think economy or economic pressure isn't building up? The small regional banks are failing. Why are they failing? Because when the Fed increased the interest rate, every bank has an income fund. Their income fund is bond for portfolio. When the interest rate goes higher, bond prices comes down. But when the interest rate goes drastically, sharply higher, the bond prices gets down sharply. There's an inverse relationship between interest rate and bond prices, right? And do you think that the large bank does not have a problem? I think it was, I forgot the name of the bank. They're mark to market. Mark to market is the price you bought to the market today. They are down $35 to $40 billion on their fixed income portfolio, right? So when the market is trying to seek for a direction, market is confused. Some will go higher, some will go down until things come into sync. I have seen in my 30 years of experience and 25 years in the international market that Fed is saying policymakers are most of the time sitting on the wrong side of the fence. Now, when it comes to market, bond market is anticipating 3 rate cuts in this year, which is too aggressive. Which at the moment to me looks like a wishful thinking, but they are right on one thing, that there are rate cuts. As they say, very crude phrase, there could not be one cockroach in the kitchen. If you see one, expect an army of cockroaches sitting somewhere. Exactly this is what happened in 2007. We all do remember about subprime mortgages and subprime defaults and everything. Does anybody remember who was the first bank who took the hit? Anybody remembers? When subprime problem started? It started in 2007, first or second quarter. The first bank who took the hit was HSBC. They took over $1 billion of loss in the US mortgage market, and they got out of the US market. They got out of the US mortgage market. They were the smart one. Then came Citi and JP, and everybody had a problem, too big to fail. AIG, they got into trouble. So again, coming back to a very crude quote, when you see one cockroach, you have to be very cautious. Something is cooking up. I hope this answered your question. Guys, if you have any question, please let me know. There are a lot of messages. Okay. I'm not reading. Okay, right, guys. It doesn't affect. Anyways, if there's anything, please. I haven't read through all the chat. If there's anything, if you have put any question, please feel free to speak out.
Thank you, Ali Bhai, for your time. That was
You
precious
You are most welcome for
information that we have received today. Alhamdulillah, it was very insightful for the futures. And right now, the futures are actually 1/4% down on all of the indexes. So
Yeah.
they are lagging. They are lagging. They are right according to your theory that what we were discussing.
Yeah, see, on NASDAQ, on MNQ, I'm looking at this line
Yep.
of defense, which is
Mm.
13,860. It can go up to 13,860, but eventually it's coming down. And the other thing which I'm focusing on is, if you look at NASDAQ is come exactly at the point which was distribution here. We have done a major distribution. We have failed here. And we're coming to the same point of rejection. It was rejected. We come to the same point of rejection. You look at the MNQ, similar situation,
Same thing.
same thing.
Khurram bhai, and you guys are the best. We learn from the best. So hopefully our thoughts, our speaking was not beyond
Oh,
whatever.
no. Actually, it's not. Basically, this is a productive discussion. Critics, productive critics, which is very good. You know, unless you do not discuss it. As I said, if you have ego, financial market is not for you.
Exactly.
Yeah, because financial market proves me wrong many times during my trading period, many times. And I always say, market is the master.
Correct. No, we should have bought the Tesla at whenever it was 100. You were expecting that to go to 80, but I was expecting it is not going to be below 100. But
No, I
that
was
a-
not expecting it to get to 80. I think I was part of the forum. I joined the forum initially by the name Ali, and I've seen what happened, like the telegrams. Most of the guys were into intraday trades, and I was very much into
Correct.
swing trade.
You're
Now, if you
correct.
remember in November, December, I was saying SPY is going higher. There is an ascending triangle. And a couple of guys, they came up. I mean, I respect, because it's a game of perspective. I'm looking at a different
Exactly.
perspective. Now, what
Mm.
I'm seeing in Tesla is the rejection of this line.
Trend, yeah.
Historically, what happened, it broke through this line, went to the upper boundary and rejected the upper one. Here it has rejected at the first layer. That means a drop probably before it goes higher. They say there is one saying
Correct.
in the market.
It will retest.
Sorry, come again.
It may will retest the 168, 170, and then bounce back from that trend
It's
line that as we
possible,
were
but I
discussing.
think 168, 170 is, again, anything is possible. But from my perspective, it's not going beyond 174, below 174. Then that will disturb the whole structure.
Got it.
There's one thing in the market, and that everybody has to keep in mind. Trend is your best friend. Follow the trend until it bends in the end.
Until it bends.
Bends in the end.
Good one.
Okay, guys. Thank you very much. If you do
Thank
not
you very
have
much.
questions,
Thank you very much, Khurram bhai.
thank you, guys. Thanks
And
for
guys,
being here.
everybody, if you have any more questions about, or any other questions about the actual course, I did write that in the comment section too. All the information that Ali Bhai has given us today, this is just a tip of the iceberg. So there's much more extensive and a lot of much more extensive information that's going to be shared in the actual course. And I've said this before. I used to think I'm a pretty good technical analyst, and when I did take this course myself also. So and I literally started seeing the price patterns, the RSI, the moving averages, all of those things differently now. And they've been very, very helpful. And everybody who's in the group, you already know that I've been pretty successful in terms of trading. So thank you everyone for joining in today.
Thank you very much, guys. Have a wonderful evening, and then we'll stay in touch.
Definitely.
Thank you.
Take care, guys. Bye.